Welcome to the Snowbirds Expat Radio Podcast, powered by the Snowbird US Day Tracker app. I'm your host, Gerry Scott, and my goal is to give you answers to your cross-border questions, to ease the stress of a cross-border move or extended trip, and to keep you up to date on all you need to know with cross-border rules and regulations. Now let's get on with the show. Well, welcome to the Snowbirds Expat Radio Podcast. We have a returning guest today. We have Trent Robinson, and he is from Saskatchewan. And Trent, before I get into these questions, and I'm going to keep it really easy, this is a great topic today, which we're going to be discussing. But before I fire away with my rapid questions here, tell us more about your firm and where you're located. I mentioned you're from Saskatchewan, so go ahead. Tell us more about yourself.
Sure. I'm one of the partners at accounting firm Buckberger Partners. We're a local firm here in Saskatoon, Saskatchewan, and we're a full service accounting firm. My specialty is actually to help individuals and businesses who are either in the States coming into Canada or in Canada going into the States. I do also file some U.S. tax returns for U.S. citizens living in Canada and people who sell properties and those kinds of things.
And I would think the selling properties is going to be a very big theme with all the noise we're hearing out there in the marketplace. But a quick question for you. How did you get into U.S. tax?
Honestly, it was I got into it because my very first job working as an accountant out of university, senior manager was like, "Do you have an interest in learning some more?" And I was like, "Yep." And then he just kind of taught me how to kind of deal with these kind of situations, and I've been doing it ever since then. So that would have been 2008.
Holy smokes. It seems like there's a lot of us that have those types of stories where, how did you get into the cross-border space? And I know myself, it was based on spending a lot of time in Maui. And then our dealer came back and said, "Hey, you're spending a lot of time in Maui. Have you ever thought about becoming U.S. licensed?" So that was about a 15-second conversation. Sounds like yours might have been a little bit longer. So the questions I have today, and this is very, very common, when you have American people that move up to Canada here, and really what it comes down to is the question is this: when a Canadian resident holds a non-registered investment account in the U.S. or vice versa, what are the most common tax traps you see, and what should people understand before opening the account?
So the most common tax traps that I see is when you're opening a non-registered account in a country that you are not resident in. The biggest issue is that you could be buying investments that are structured in a way that is very much detrimental to the tax results that you would get as a resident of Canada. I'd say one great example of this would be investing in entities that are partnerships under U.S. law, especially since the withholding tax is very difficult to very difficult to recover for a lot of situations.
And I guess...
And can be punitive.
Yeah, so I guess what we see a lot, and I know this colleague of mine, Carson Hamill's written great blogs on this, and he's contributed to Globe and Mail articles, is when we have a U.S. person or a Canadian returning home, and they've got this established relationship with their advisor in the States, and the advisor, and this happens on both sides of the border. If a Canadian moves south or American moves north, the advisor wants to maintain that relationship. So the first part of the question is you've got this American moving north. He's got this established relationship with his accounts. What happens with that North American account, or that account in United States that's non-registered? How does that complicate your situation when you're trying to file the tax return for that American now living in Canada?
Well, I mean, the other like huge issue is that the tax reporting information that is generated out of the out of the account will all be U.S. tax related info as opposed to like Canadian tax related info. And there's very important differences between like how that works in Canada versus the States. Like the concept of a qualified dividend from a US perspective is utterly irrelevant from a Canadian perspective, but people might be confused and think that it is like an eligible dividend. But like they are very, very different concepts.
And I don't think these advisors are deliberately doing harm, but they've got their relationship with the clients. They long-lasting relationships, and they're just being told when Mr. and Mrs. Smith move up to Canada here, and either they're returning to Canada or they're permanently leaving. Don't worry about it. Use your daughter's address, and we'll make it work. You must see that a lot.
The other actually really significant kind of tax trap I see in regards to like this kind of reporting is situations where, yeah, they've left the address of a close friend or relative who still is in the States on their account. And so the U.S. financial institution is completely unaware that they are no longer a resident of the States. And as a result, they basically issue tax like 1099 tax slips as opposed to 1042S tax slips. So 1099 tax slips are generally issued to people that are resident of the States, whereas if you are a non-resident of the States or a non-resident alien, um, normally if you're paid some sort of U.S. source income, you'll get a 1042S, and there'll be withholdings based upon the appropriate non-resident withholding rates on that. But like if the withholdings don't happen properly, it creates a giant mess because you then need to pay the US, and so you need to go file a US tax return, and then you need to go and claim a foreign tax credit in Canada for that, both of which are creating a bit of an administrative nightmare over what probably isn't an enormous amount of income.
We'll be right back.
Thinking about becoming a Canadian citizen? If you're a U.S. resident living in Canada on a work permit, permanent resident status, or planning your path to citizenship, you already know the rule: 1,095 days of physical presence in 5 years. Meet the Canada Physical Presence Tracker, a simple, reliable mobile app that helps you log your days in Canada, track multi-year stays, and monitor your progress towards citizenship right from your phone. No spreadsheets, no guesswork, just clear tracking so you can stay on track. Download Canada Physical Presence Tracker from the App Store or tap the link in the show description. And if becoming a Canadian citizen is part of your plan, you're already in the right place. Snowbirds Expat Radio features conversations with top immigration lawyers and cross-border experts to help you understand the rules before they become a problem. Build your path to citizenship with confidence.
Now, I know there's regulatory issues. I know a lot of these U.S. firms, even when it comes to the IRAs and the Roth IRAs and the 401ks, I know these firms are, in my understanding, is they're offside, because a lot of these firms cannot have assets being managed for a person, a U.S. citizen who lives outside of the country. So it does create a mess, and of course we've got guys like Trent to bail people out. Are there any issues on the CRA side if that income is not being reported? I know we hear about the IRS implementing these huge fines. Does Canada ever implement fines knowing that there is tax due to the CRA? Is there avoidance of tax that the reason why they do this from time to time, or are they just unaware?
So, it takes CRA and the IRS do have a pretty comprehensive information sharing agreement between the two countries. And so, the information sharing isn't quite as quick or timely as it would be for just like normal Canadian T-slip. So like if you receive a dividend from a Canadian brokerage account that is doing proper reporting, CRA gets that information basically by February, and it's all in their database in a way that they're able to do the matching very quickly. However, if you're in a US brokerage account, they're not going to get the information quite as quickly. But that's in many cases so much worse because CRA oftentimes won't come back and start asking you questions about it until maybe like 5-6 years later. But then when they do, they're going to ask you, they're going to be wanting to deal with all of the tax issues for 5 or 6 years in a row. And then there's oftentimes going to be significant penalties that are going to be imposed. Maybe not, and interest. The penalty would be like failure to disclose more than foreign investments in excess of $100,000.
Okay. Now,
and there's a $2,500 a year penalty for kind of missing that.
Now, do you find some people just do this to avoid? So if I have all my assets, I'm an American, I'm living in Canada, all my accounts are in the United States. Is there some ignorance or maybe some misunderstanding that maybe the FBAR doesn't have to be filed from an IRS perspective? Or do you think people are just immune and confused and have no idea and don't want to pay the fees to have a professional do their tax returns?
I think from my experience, I find that the FBAR kind of has been around long enough that people almost associate the FBAR with the U.S. return kind of as a package, and so people are more surprised that they need to be filing anything at all when they're living in Canada full time. So it's more so the entire package of filings rather than just the FBAR in particular.
Okay, without naming names, can you share with me one of the most extreme cases that you had to manage? Client comes to you and says, I've got some problems. Share with us that one of the most extreme cases that just took time to clean up and the whole works.
I think probably the biggest situation is just where I had an example of a U.S. citizen who wasn't even really aware that they were a U.S. citizen. Like they weren't born in the U.S. They weren't, and they never lived in the U.S., but their parents were U.S. citizens. And then the person ended up being ended up owning a number of businesses here in the local area, and it was a very difficult situation to try and work through. Ultimately, the person did renounce their citizenship, so they had to go through the whole process for for 5 years, and then try and get onto the. They had to go through the whole process for 5 years, and then we had to walk through all the implications of being covered expatriate, which was some of those there were some very difficult conversations.
I believe that this space over the last 10 years has really evolved. There's a lot of great professionals, people like yourself. What advice can you give to a person now? They're living in United States. Maybe it's a Canadian who's returning after 30, 40 years. How much planning should be done before they exit United States and come back to beautiful Saskatoon?
Well, I think the main thing is that every situation is very different, and for some people, it's just like the small little hints and tricks that even if they were missed are not necessarily going to be the end of the world. For other people, it's a matter of restructuring their entire life in order to make sure that their situation is going to drive. I'd say that in general, it's the two things that can make things a lot more complicated is just having a significant amount of wealth kind of any place can cause issues, and also the more that you're going to continue to have involvement with both Canada and the US on a go-forward basis results in some important planning considerations.
Now, I have to say, I've never been to Saskatoon. Is it really a hotbed? Are you finding that there is a lot of Canadians that are coming back, or even Americans moving to Saskatchewan as a province? Is it quite popular?
There absolutely is a significant number. It's hard for me to necessarily quantify or put data on whether or not like it's a higher proportion than other places in Canada. But like from my experience, I've had no. I certainly have enough clients to be keeping me quite busy, and so yeah, there is quite a few people who are in this situation.
Yeah, that's interesting. Well, I believe that there's a lot of towns that are really becoming these hotbeds. We're just going through a process of building a home over in Qualicum Beach on Vancouver Island, and I'm surprised how many Americans, expats, either Canadians have returned home or Americans actually moving to Vancouver Island, not just Qualicum. So it's very interesting. I guess with all this current noise out there, Canada's becoming, we're all getting very busy in this space. So it's very interesting. Well, so how do people get a hold of you? They listen to this podcast and they say, listen, Trent seems like the guy I want to work with. What do they do? How do they get a hold of you?
So I recommend that they log into our website. It's www.bblp.ca, and our firm's contact information is like well displayed. They can see myself, see some of my background, and then reach out to me through the website or give our office a call.
Okay, well, I'll tell you what, I'm gonna. I know that you're pretty excited. You're going down to the States next week to spend some time with your parents in Palm Springs, and as Trent put it, he says I get to be retired for a week. His parents were avid golfers, but Trent is just looking forward to the warmer weather, I'm sure. So, Trent, I appreciate your time. I appreciate your wisdom, and we look forward to sharing clients as we have in the past. So thank you for your time.
Thanks a lot, Gerry. This has been awesome, and I look forward to joining you on your podcast in the future.
Thank you.
Thank you again for listening to the Snowbird Expat Radio Podcast. The best way you can support the podcast is to forward the episode to a friend, and please don't hesitate to like, subscribe, or leave a comment. Now, before you go, let me leave you with one of my favorite quotes. Be kind to all, the world is small.